Here with us tonight to disabuse us of many misconceptions about Aquis is Alasdair Haynes, Group Founder and CEO of the Aquis Stock Exchange. Alasdair is going to be taking questions afterwards, but first he's going to present to us. Over to you, Alasdair.
Well, thank you very, very much indeed for that great welcome, and welcome to everybody for this Aquis Stock Exchange special. For those of you who don't know much about Aquis itself, I thought I would start off by showing you a little bit about Aquis Exchange Group, the PLC, and then we'll spend the rest of the evening talking about the Aquis Stock Exchange. Hopefully everybody can see that. I've now managed to share the screen. So let's get started. Aquis Exchange PLC, as you said, we're just under a £200 million market cap company. We are one company, but we operate three different divisions. The Aquis Exchange is the world's first subscription-based exchange. Now, what that means is that we don't charge people based on the value people trade. We charge on the message traffic that people use. And we brought in a very innovative rule that actually prohibits the low latency, high speed traders, the proprietary traders, from crossing the spread on our market. Now, what that really means is that the liquidity pool in our market is very, very different to any other exchange in the world. Aquis Exchange today, although you may not have heard of the company, is the largest provider of liquidity in the 1,700 top stocks in Europe across 15 different markets. That means that we are the best suppliers on the bids and offers at the very best prices available. We execute, this month it's just over 6% of all equity trading in Europe, and that makes us the 7th largest exchange group by value of turnover in the whole of Europe. So we're not a small exchange in terms of equities. That is our expertise. We are a tech company. We also we have Aquis Technologies, and we supply technology to the exchange industry. In fact, we've done recent work with the Singapore Exchange and Amazon Web Services to be the first ever company to provide exchange grade technology in the cloud. But of course, as Donald said, what we did last year is we ended up buying the Next Exchange, and we paid £1 for this business in order to get the recognized investment exchange license. Now, what is important about that is, and this is daytime television, so I can't really express my real views on what the previous attempts had been, but whether it was ISDX, NEX, OFX, or Plus Markets, let's be perfectly truthful, none of them have succeeded in being true competition to the national exchanges. In order to do that, you have to increase institutional and retail investment. And many of you will have heard me before on various platforms saying, we have to get the public back into public markets. The retail play a critically important part, not only in the IPO process, but also in the secondary trading and providing of liquidity. We have to raise standards, and we have to have that liquidity in the secondary market. Otherwise, there's no point in bringing your company to the public markets. So I believe that companies are very much like children. They start small, they grow, and ultimately they mature. But unlike, so with our children, we send them to start with off to primary school, and we have a set of rules, and we have a set of behaviors that they have, and they're there in the primary school to learn how to learn. And as they progress, we then move them to a secondary school where we give them a different set of behaviors, a different set of teaching mechanisms, and they learn then to become adults. And ultimately, we then send them to university where once again, they have a different teaching mechanism and a different set of behaviors. Not always appropriate, but that's what happens. Now, when it comes to the United Kingdom and companies, that's where the problem is, because we have a one size fits all, one sort of regulation. Every company that goes public suddenly has to become an HSBC standard. We don't have proportionality of regulation. We don't have appropriateness of trading mechanisms. And for that reason, many companies never reach the public market. We all know that a company that has 2 million or 5 million market cap trades differently, acts differently to a company that, say, a £200 million market cap, which trades differently and acts differently to that which is 3 to 5 billion. So what we've done at Aquis is created this school to bring back proportionality and appropriateness in the way that they can trade. So in the access market, which Donald was talking about, This is for early stage companies, companies that need to learn, just like in a primary school, learning how to be public companies. They don't have to sign up to a corporate governance code. So you're not necessarily going to see huge institutional investment in these companies. Some do, but not all. But you have different standards and different rules, very clear rules. Then you move from there into the secondary market, which is the apex. And as Donald said, we have 2 companies today in the access segment, 2 companies in the apex segment, all of which are incredibly exciting companies, I believe, are part of the new economy of the future. And this is exactly what we want to be as Aquis, a new economy exchange, the NASDAQ of Europe. So as companies enter the apex market, they get these different benefits. We have a different set of teaching. They have a higher standard than, say, on AIM, because there's a growth prospectus. We can allow retail into the IPO. We want to see retail in this segment being ranked alongside institutions. We give them a market maker scheme so that market makers, and today there are six market makers providing capital that will actually can be no wider than 5% spreads for the retail market. Now, when you do that, guess what happens? The spreads narrow, liquidity grows, and then institutions come and start to trade as well. But since January, since we introduced that, we've seen spreads decline by 60%. We've seen turnover increase by over 1,000%. We protect these companies. We ban short selling so that companies there can, and the entrepreneur can do what they say they want to do, and the shareholder doesn't suffer if by a third party coming in and selling these stocks short and pushing the price down. So we want to protect people. And the great news is if you use the technology, you template the documentation, we don't have to go through what we did at Aquis when we floated on the AIM market, which it cost us £1.4 million. It took us 9 months to do. And we get a spread of 10 to 15% afterwards. What we want to see are markets where you can come to the market, you can IPO your business very, very quickly within a 1 month, 2 month period. You can do it at a much, much cheaper price, not a lower standard, but a cheaper price, and you can get guaranteed tighter spreads. This only works if you get connectivity. You have to be able to, as retail players, be able to trade on every single exchange. And that includes Aquis. So what we have is connectivity today with interactive investors, with AJ Bell, with Jarvis, with Barclays, Pello, all these people. The one we don't have is Hargreaves Lansdown. So if you're out there and you have an account, please call them and say you want to trade on these great businesses that are out there. So in summary, we're here to change the primary markets, to enhance the secondary liquidity and allow early stage companies to attain capital through the retail and the institutional market. And that is Aquis.
First question, I'm going to challenge you on the electronic trading front. The 4 questions I've received from investors, including Robin Mays and several others, it's about electronic trading. They say you may be on these different markets, but it's actually difficult to trade. Often it's telephone trading, and in this day and age, telephone trading is not sufficient. What's your answer to them, Alasdair?
Well, I think Robin's spot on, which is it is absolutely critical. We live in a digitalized world. There's 3 billion people out there who digitally communicate, digitally game, digitally shop. They must be able to digitally invest. And that is absolutely essential, which is why we have pushed very, very hard amongst the people like Smart Investor by Barclays and Jarvis and, Pello and AJ Bell and Interactive. Now, some of them, Interactive today, haven't got all the data that we need, but we are pushing very, very hard because you're right. If we can get narrow spreads, if we can get liquidity, if we can get capital through the retail market and the wholesale, the institutional market, then we can grow a really competitive exchange. And it's in everybody's interest that we actually have true competition in the exchange world. So we are absolutely on that case. And we have, definitely have pushed a lot of people to do that. The example of that is, since this year, since the last 12 weeks, we've had 12 companies IPO. We've raised over £80 million. We have 50 more companies this year in the pipeline. And we've seen these spreads collapse by 60%, and we've seen this turnover rise. Now, I don't want to sound arrogant, and that's only the start of it. But, it is the retail investor who will make a difference as to whether Aquis succeeds or fails.
Now, in terms of your relationship with these different platforms, give us an insight into the discussions you've been having with them. Is it you being slow? Is it them being slow? Is nobody being slow? Is it hard to get the data? At London South East, we're data-based, and it's really tough dealing with data suppliers. Tell us all.
Technology and sort of the allocation of resources for the technology. We are one of the leading technology providers to the exchange world. So, as a result, we put our technology straight in. The moment we bought Next, within 6 months, we had our technology up and running. The connectivity of that is pretty simple. However, there are things like Morningstar in data had to change things. Many of the individual brokers themselves had to make changes. But what is important is that each retail investor phones up and complains and says, I want to be able to trade in Semper Fortis. I want to trade in Samarkand Group. I want to trade in Valereum, I want to trade in Sativa, then they have to change. And that is exactly what happened. AJ Bell, in all honesty, didn't want to do this to start with, but they had so many calls, and so did Interactive, so did all of them. And that's why we know that Hargreaves Lansdown, which is the last of all of them, they will also change, because it's pretty easy for investors. If you can't trade there, I've known a number of people at Hargreaves Lansdown who have moved their accounts simply because they couldn't trade on incredibly good stocks. Many of our stocks are up, very, very substantial amounts over the last few months. And, we think the investors ought to have that right. We dealt with ShareSoc, a survey. 82% of people who were interviewed by ShareSoc, this is hundreds of people, all said they want access to all markets. And that's exactly what people should have, access to all investment opportunities.
I'm sure we're all right behind you there, Alasdair. Okay, nomads and institutions are shy of Aquis and prefer to put their clients to AIM. This is something I've heard lots of times. Is there any truth to it?
Well, nomads get paid. I mean, this is one of the things, but we believe that we should have a relationship with the company and the advisor. And the nomad charges a lovely fee every month, every year, and may not actually have to do any business for that company. This has got to be a more efficient and better way. Yes, nomads will often put things towards, or try and put things to AIM, because they want a big fat fee. However, people need the choice. And I think when we get in front of a company and say what we can provide and what we can do at a cheaper cost, at a higher standard with greater liquidity, then actually many companies, which is why we have over 50 odd so far this year, and that's growing, and that's why many people are picking Aquis now. The size, just by the way, Apex stocks, they average 80 million market cap. The access stocks, even though the entry point is sub to 10 million, actually the average is pretty close to 13, 14 million today.
Alasdair, thank you so much. That was very enlightening, and that was terrific.